please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
About 0.5% higher, 10,672. Actually, the pre-market levels have been maintained and the Sensex is building on it.
The big test case for opposition unity is certainly as far as the Kerala results are concerned. So it's going to be extremely critical.
The market has just got into that consolidation band of about 10,400 to 10,700, and I think it could stay within this zone for a few more sessions.
As of now, they had not reported fulfillment of any condition, and there are tens of conditions. All is well. There's nothing, unusual or different that is happening as far as the company operations.
It's a market which is quite volatile. Frontliners are doing well, but mid-caps under pressure.
It really was a one-stock show today, HDFC Bank. And that one late trade. At start, it was up only 2%. Let's not forget that. For better part of the day, it was stuck at 2%. But then towards the end, it made that move. And of course, it took the Bank Nifty along with it. Other index gainers today included names like, other banks like SBI in particular,
HDFC Bank and SBI.
Crude oil prices surge. Brent trades near $77 per barrel levels as reports suggest that OPEC will maintain production cuts. The rupee falls and bond yields jump. NBFCs feel the heat.
BJP suffers a setback in some Lok Sabha poll constituencies. Markets likely to react tomorrow to the results and to the GDP numbers, which are due in a short while. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all about the ups and downs of 8 hours of trading in just 5 headlines. Today is an important day, it being quadruple expiry. The May contracts expire, the futures contracts expire, the options contracts expire, and the weekly Bank Nifty futures contracts expire. So tricky day. I'm Lata Venkatesh and with me Prashant Nair.
Lata, hi. And big surge. I mean, if you missed the last 1 hour of trading and you looked at the screen at 2:30 and 3:30, I mean, you would have found a big difference. Question, of course, is how much of this is short covering, how much of this is actual, buying, underlying buying. We'll try and answer that and more questions over the next 30 minutes. We wrap up the day's trading action essentially through 5 top stories which dominated. Our market experts will join us to answer your stock questions. And to help us do that, we have Anand Tandon, who will take questions. We also have a technical expert, Mitesh Thakkar. Gentlemen, both of you, thanks very much for being with us here on the show. But before we start the Q&A session, let's quickly wrap up the day's trading action. Lata.
It's confusing because it was entirely dominated by, as I said, futures and options, pulls and pressures. So you can see the way in which normally on a day like this HDFC is pulled because it's easy to pull it as a minor floating stock, but heavy weight in the index itself. On the Nifty Bank, IndusInd and HDFC Bank did the trick. SBI as well helped. Broader markets is where you can continue to see the pain. So it doesn't look like it's an all-out victory for the bulls, because if that were the case, you wouldn't see so much pain in the broader markets where there are 2 stocks declining for 1 stock advancing, giving away the game. That bears are still very much in control over there, or at least pessimism continues to rule the roost. And why not? Look at the crude pressure. That is back above the $77 mark, almost close to 78 at some points in the day. And that has kept the yield very high, 7.83 yet again. And that's always obviously negative for the NBFC stocks. So my sense is that the slight setback that the ruling party faced in some of the buy polls and the pressures of the GDP numbers and the pressures of the crude rising back will all kind of find play either tomorrow or next week. Maybe they have been only kept at bay by the expiry pressures. But anyway, stock specific, anything you want to highlight?
Lots of stuff, but we'll stick to a few of the top movers, both up and down. So spots of strength, financials, HDFC Bank. So Nifty Bank, Private Bank, PSU Bank Index all up strongly. Private Bank Index, of course, up a lot more. PSU Banks higher, but marginally. IT and energy stocks were the other 2 indices where there were gains. Pockets of weakness, pharma, real estate, metals. Let's get to stocks now. You look at large caps, which did well. and HDFC Bank and HDFC, the twins there. There's Indocin and Kotak. There's Mahindra and there's Adani Ports. I mean, that's essentially the bulk of the top gainers. And I mean, even by weight, they'd account for a big chunk of the gains that you saw by close. Big stocks which were weak, Sun Pharma, Tata Motors and Aurobindo, I mean, were lower. What was under pressure, and I'm starting with stocks on the lower side in the mid-cap universe, Bombay dying 11.5%, Dilip Bilkon 10%, assurances did not help on Dilip Bilkon. PC Jeweler was down 5%, Manpasand another 10 circuit, although for a brief period circuit did open, but I think by close it was back down. Crisil that was down 8%, Hindustan Copper was down 7%, V-Guard, Avanti Feeds has been selling off quite a bit, and Hathaway Cables was down 8% as well. I mean, mid-cap gainers, Torrent Power and Torrent Pharma both were higher. Indiabulls Ventures showed up. Punj Lloyd, I mean, BGR Energy and a few other names, but mid-caps, as we pointed out earlier, were under pressure even as large caps made a big move higher. Lata.
Okay. Well, with that, let's ask our guests what they've made of the markets. First, of course, technically, Mitesh, where does the chart head? The Nifty having broken the 10,700 mark and the Bank Nifty making a huge monster of a gain of over 2%.
Lata, I think a couple of observations, Lata. I think getting past 10,700 technically is definitely important. I think that should possibly set us up for 10,850, 900 zones. My only worry is the internals, and I'm not sure as a technical analyst I should be worried about that, but fact of the matter is that this move was clearly led by HDFC Bank and the news of, the FI window closing down. So I'm not sure whether we'll see this kind of participation come in again, and therefore whether we'll get in follow through or not. The idea should be that since you have a price which is breaking or trending on the upside, trade on the long side, but given the fact that there's less comfort on the internals, I think trade with lesser aggression. So very clearly, maybe you will maintain a long bias in case you sustain about 10,685, 10,700 zones and look for 10,850, 900. But I would not be a very aggressive long player over here.
And in the Nifty Bank?
I think Nifty Bank, very similar things. 27,250, 200 is the earlier pivot. I think maybe we'll hit those levels, and in case we start getting past beyond that, I think that will clearly suggest that the Bank Nifty is seeing a follow through and that will have an effect on the Nifty. So maybe after 27,250 I'll be more aggressive on the Nifty Bank.
Okay, so I mean that is basically charts. The other element which was in play today, of course, was the bipole results, and Anand, we'll just come to you for your reaction on that and the impact we may see tomorrow. But here's the second headline for the time being. Mid-cap stocks failed to shine in trade today. Nifty Midcap Index ended 72 points in the red. 2 stocks declined for 1 stock advancing, so breadth was poor. The fall was led by Suzlon, Manpasand, Dilip Bilkon, some of the stocks, all of which tanked between 9 and 11%. We've got, I think, questions, Lata.
Yep, this question is coming from Ishank Gupta. He wants to know if he should make fresh investments in Dilip Bilkon, but his investment period is only 3 to 4 months. If not, he wants to know what to invest in. Okay, that's a bit of a confused question. Well, in any case, Anand, what would you advise him? Should he get into Dilip Bilkon? And if not, what else?
Well, Dilip Bilkon, obviously there is some concern that the market is expressing in terms of the news flow that is there. Now, it's really a toss-up, right? Because if there is any truth in the rumor, then obviously you don't want to touch it. If, however, there is nothing, no truth there, and if you look at just the numbers, there is no reason not to be buying the stock. So really speaking, I don't think that I have any additional insight to give. It depends on the view that the investor wishes to take, whether how much risk he is willing to go along with. The market at this point of time is not willing to pay for any kind of doubt at all. If you look at many of the other companies, wherever there is a doubt expressed, there is just no recovery happening. So to err on the side of caution would be my advice. There are other quality stocks out there which are perhaps likely to do better. And if you want to remain in the same kind of space and look at construction related area, then my bet would be something like Wabag, where the performance has been poor, but the outlook looks to be very promising, and the valuations are not yet reflecting that. Disclaimer, I do own that stock.
Okay, you said VA Tech, right, Anand?
That's right.
Okay, all right, fair enough.
That's right.
Fair enough. Okay, we got another question. Twitter user Kaushik Gandhi is writing in. He's got 200 shares of Reliance Naval. He's paid 49 rupees. 48.5 rupees to be precise. He wants to know if he should hold or sell. Reliance Naval is what, 16 rupees or so? That's what I see. Yeah, around 16 odd rupees. Do you track this one, Anand? Any thoughts? Reliance Naval?
Again, the short answer is no, I don't track it very closely. I had looked at it in the past. Too much of debt remains to be the biggest problem. And again, you are taking a call on whether that will get sorted out or not. Right now, it doesn't look like there is any kind of recourse that is likely to happen. So again, in the near term, erring on the side of caution, I would think that it's better to stay away from over-leveraged stock. Again, one of those things where very clearly the market doesn't like it. And if it does go, if the NCLT process, etc., doesn't give you any money, I think that is at least clear. So therefore, from that point of view, it is perhaps better to look at slightly unleveraged companies rather than getting into seriously leveraged ones.
All right. Well, let's get to the third headline. This is on the Nifty Bank. That index clocked big gains in trade. The index ended over 2% in the green, pulled up by private banks like HDFC Bank, IndusInd, Kotak Mahindra Bank, as also by SBI, which ended about 1% higher. Well, the questions on this, Twitter user Krishna, he holds 2,000 shares of SBI, which he has bought at 276 rupees. He says he can hold it for a year and he would like some advice on that. Well, hold it for a year. What should he do? Anand, 276 rupees SBI.
I think if you can hold it for a year, you should definitely hold on to it. One of the theses that at least I am working on is that the corporate banks have to start doing well this year, and the likelihood of further surprises on the book should be low. Now, the problem is we've heard this a long time back, many times in the past as well, and it hasn't turned out to be true. But it does look like now, unless you see a serious degradation in terms of the quality of, perhaps in the GDP, etc., you will not likely face too many problems from here on. Also, the valuation is completely non-demanding, at least as far as SBI goes. I think if you look at a 2-year stretch and, depending on how much discount you want to give to the subsidiaries, you could argue that it is even trading at a book value. So, therefore, I don't think that there is any downside other than perhaps a trading downside. If you want to worry about that, it's a different issue. But I don't think that there is anything much to lose in SBI at these levels.
Okay, fair enough. We've got another one, which is a private bank, IndusInd Bank. IndusInd Bank surged today, 4% or so. It also, by the way, made a new all-time high. So this is the question. Twitter user Asit is writing in 100 shares of IndusInd Bank he owns, and he's paid 1730 rupees. So he's sitting in with some gains. He would like some advice on it. Mitesh, what would you tell Asit?
Yeah. So I think, very clearly this is one stock which is kept on making higher highs, and today also made a fresh closing high. I think trail your stop loss to about 1840, 1845 in case though, and just maybe 10 odd rupees below that. In case that is not being broken, you can continue to enjoy the ride, and I think the stock can head towards 2100. But that should be about it for the time being.
You have a positive view on it, Anand. The gentleman is sitting on a 200 rupee gain, and the stock is of course close to 2000, 1955.
Well, it has been one of the most consistent performers, so I don't think you should worry too much about it. At best, put some kind of trailing stop loss if you are really worried about trying to protect your near-term profit. Otherwise, the basic thesis that private sector banks will continue to grow and gain market share is definitely still valid. The only risk that I see in the whole system is that if some major changes happen globally, we saw that happen to Italy just a couple of days back. If some of those triggers happen, then obviously there will be some problems in financials. But then IndusInd Bank is not going to be the only one that's going to be hit. It will be much more widespread. So other than having some kind of trailing stop loss, I would recommend that you continue with it.
Okay. Thanks for that, Anand. Mitesh, stay with us, gentlemen. We have to take a very quick commercial break, so let's do that. And when we come back, we sort of go through the other two headlines and Q&A as well. We leave you, though, with some market opinion as we go into the break. Gautam Shah from JM Financial. Stay tuned. Back on the other side.
I think the market has just got into that consolidation band of about 10,400 to 10,700, and I think it could stay within this zone for a few more sessions, and eventually, you know, maybe over the next couple of weeks you could actually see a breakout beyond 10,700, and once that happens you should see the Nifty, you know, inch towards the level of 10,900 once again, and then possibly
go through the other two headlines and Q&A as well. We leave you though with some market opinion as we go into the break. Gautam Shah from JM Financial. Stay tuned. Back on the other side.
I think the market has just got into that consolidation band of about 10,400 to 10,700, and I think it could stay within this zone for a few more sessions, and eventually, you know, maybe over the next couple of weeks you could actually see a breakout beyond 10,700, and once that happens you should see the Nifty, you know, inch towards the level of 10,900 once again, and then possibly towards new lifetime highs. I think the series of higher tops and higher bottoms is likely to continue throughout the rest of this year, and this consolidation that I spoke about is really the foundation of the next big 10% move that is likely to come in on the index, and we expect that to play out, you know, in the next 6 to 8 months. So once we have that breakout beyond 10,700, you will have triggers in place to believe that closer to the end of this year you could see the Nifty at 11,800 level.
Welcome back. You're with us here on Markets Today Talk Back. Big, mostly short covering led surge, which we saw the Nifty Midcaps underperformed. We've been discussing the day's events through the top 5 headlines. Mitesh Thakkar and Anand Tandon are with us to answer all your market questions, stock-related questions. Well, we got through 3 of the top headlines. So here's the 4th one. Crude oil prices surged yet again today. Brent is trading near the $77 per barrel mark. And this after reports suggest that OPEC will stick to the production cuts. Rupee fell and bond yields jumped on the back of this news flow. NBFCs felt the pain of this increase as well. We got a question coming in on L&T Finance. Twitter user Govardhan has 800 shares of L&T Finance. He's paid 52 rupees each for them. He would like to know the outlook for the next 5 years. Mitesh, 5 years? I mean...
No, I think that'll better be to Anand then.
Anand, you want to take it? Why don't you take it? I mean, if you track it. Mitesh, I'll let you think about that for a minute. Anand?
Sure.
Well, you know, this company has done quite well since they restructured their portfolio and started focusing on a fewer areas. From trying to be a bank, they are now back to being an NBFC, and obviously the management is doing a good job of it. On a 5-year view, most companies which are in the lending business will do reasonably well. The only thing you would expect to see is that there should be some compression in terms of valuation. I don't think this kind of valuation can sustain. But 5 years is a long enough time where even despite that, you should make adequate returns. So from a point of view of asset quality and business profile, I think it's doing exceedingly well. From the point of view of how far it can go from here, well, my belief is that NBFCs in general are a little overpriced. But aside from that, there is no particular concern on this. So if somebody is looking for NBFCs, you can't go very far wrong with L&T Finance in this particular sector. Okay.
Well, let me get Mitesh on it. To the extent you can see the MMF, the chart of L&T Finance.
Yeah, so I think what's done is that it started the rally sometime in 2016 early, and then had a peak in 2018, and I think after 2 years of rally, it's going through a longer consolidation. I think the idea should be to buy more on declines close to longer term support. I think anything close to about 150, 140 should be a strong accumulation zone. Maybe, you know, this high of 200, 210 will not be crossed for the next few months or few quarters. I think eventually we'll see much higher levels coming over here. The longer term charts are very, very healthy. So after a big rally, when the stock went up about nearly 4.5 times, I think there could be about 12 to 18 months of consolidation, which is nothing but more of a time-wise correction. But I think this phase should be used to buy into this one. Then next leg of up move should see the stock head towards 350 plus levels.
Okay. Well, with that, let's advance to the last headline of the day. It's more a headline for tomorrow. The BJP has suffered a setback in several Lok Sabha bipole constituencies. The markets have not reacted to it today, but it's quite possible that's because of F&O pressures, and they could react tomorrow. They will, of course, also react to the fourth quarter GDP numbers, which are due in a bit. Remember, the Reserve Bank and the CSO estimates pegged the full year number at 6.6%. A CNBC TV 18 poll for the fourth quarter pegs the GDP at 7.4%. So that's the fourth quarter, 7.4. For the full year, we have the RBI estimates, which are at 6.6. Ekta Batra has done a poll of what the economists are expecting. Ekta, tell us, what is the poll indicating?
Well, yes, it is expected to be a good GDP number as compared to last quarter as well as same quarter last year. So 7.5 or 7.4% is what we are expecting. So that would be around 200 basis points more than last quarter and versus 6.1% in the same quarter last year. Now, one of the key reasons for this GDP growth would be the industries data. So industries is expected to expand to around 7.5% led by manufacturing, which is expected to come in at around 9%. Construction also should be steady with an 8 to 9% growth. Separately, it is agri, which is expected to sustain in terms of growth momentum. So 3% is what we're anticipating with a range of anywhere between 2 to 5%. And for services, it is also expected to be steady with an over 8% growth. So that would be higher on a year-on-year as well as a sequential basis, led by constituents such as trade, hotels and transport. So overall, expect a steady set of numbers this year. So target on GDP for the entire year stands at around 6.6%. If the data does come in at 7.4%, then it would exceed that target.
Okay, I'll come to the GDP data in just a bit, but first the bipole, a clear setback for BJP in some important constituencies like Khairana, for instance. I guess even the Gondia constituency would be a bit of a setback because the NCP has taken that. It is in Maharashtra where the BJP is in power with an ally. So two fairly important constituencies where they have lost. Anand, what's your sense? Will this, the market has not reacted today, although the results are known. Do you think it's just gotten postponed because of FNO pressures and we will see a negative reaction tomorrow?
Well, if the market were to move down, I would believe it's more to do with what's happening internationally than anything to do with the elections. Frankly, I think right now the bipoles to me don't mean too much. What I would be really looking for is the major state elections, that too particularly in Rajasthan and to some extent MP, because those can give you some lead into what can happen at the national polls next year. The by-elections have their own local dynamics with people being able to rally around either their local parties or a local strongman doing quite well. And I don't think that is particularly reflective of what is going on in the rest of the country. That said, the state elections obviously are going to be tough for BJP, and that is something that I would look out for. The near-term problem is, as I said, the international markets.
We just have about 10 seconds, but what's your sense about the level of the markets itself, Anand? Do you think the markets are at 10,700 overpriced? Are you a buyer?
The market, see, the index has been overpriced for a long time, and yet again, this time the earnings have largely disappointed. I don't think that it will be meeting the guidelines, and more importantly, the next year again, everybody's again starting at 20%. It will be slowly moved back down. There is no question about it. So on any kind of parameter, I think it is overpriced. If interest rates were to move up, and I think that is now the question given what's happening in Europe, then there could be some relief. Otherwise, I think it will be really hard for the market to make significant higher levels from here.
Okay, so two headwinds there, growth or earnings growth and valuations on the one hand, and of course the upcoming state elections. Anand thinks that the bipoles may not make much of a dent in the markets. We'll wait and see how things pan out tomorrow and next week when the FNO pressures will not be there. Anand and Mitesh, thank you very much indeed for joining us and taking questions from our viewers. That's it on Markets Today Talk Back. Thanks for watching.